Okay, and let's do two more problems here for chapter 3. The first one we'll look at is problem 3-2A, adjusting entries. It reads here, the selected account balances before adjustment are as follows. Some data needed for year-end adjustments. Unbilled fees at July 31st is $11,150. Unbilled fees. So we can do the first entry right away. Accounts receivable, it's been unbilled, so we got to bill it. Accounts receivable and credit fees earned. Supplies on hand at July 31st is $900. If you look at the problem, we currently have $33.50 in the account. And if the balance is $900, we need to make an adjustment to supplies expense and take it out of supplies for the tune of $24.50. Rent expired. So they told us the amount is $6,000. We debit rent expense and we take it out of prepaid rent. Depreciation, same entry every time. Debit depreciation expense, credit accumulated for the $89.50. Unearned fees are now $2,000. If we look at the unearned fees, there was 12 in there. There was 12, it needs to be 2. We need to make an adjustment out of unearned into earned. And then the last one, wages accrued but not yet paid. Accrued but not yet paid. So it's going to go to a wages payable and a wages expense for $48.50. All right, let's move on to problem 3. Basically the same type of problem again. And it asks, or it reads here, this repair and service store prepared the following unadjusted trial balance. And it says, for preparing the adjusting entries, the following data were assembled. Again, fees earned, not billed. Exact same entry as in the previous problem for $7,000. Debit AR, credit fees. Supplies on hand now are $1,300. It had a balance of $16,200. We know it's $1,300, so we got to take it out of supplies for the difference, $14,900, and debit supplies expense. Depreciation, again, they give us the amount, debit depreciation, credit accumulated. The balance in the unearned fees represented the November 1 receipt in advance for service to be provided. During November, $13,500 were provided. So now they're telling us, that's different than the previous problem, they're telling us that's what it is, and it needs to come out of unearned into earned. And then again, there is some wages that have been unpaid but accrued, debit the expense, credit the payable for the amount. And then in number 2, it just says determine the revenues and expenses of the net income. Well, we can see what the revenue and expense accounts are on the unadjusted trial balance. To that, we need to factor in these journal entries, and then we have a new revenue and a new expense for a net income of $18,400. And then it says, well, that's actually number 3. So number 2 is just calculating what is the current net income based upon the unadjusted trial balance. And then with number 3, you factor in these journal entries and you get a new net income. So I misspoke. Number 2 is just looking at the unadjusted trial balance and determining what the net income is. Number 3 looks at affecting those adjustments into that calculation, and you get a new net income. And then in number 4, it says determine the effect of the adjusting entries. Well, the difference between what net income was and what it is after the adjustment, we're looking at a difference of $6,400. That wraps up all of our exercises and problems for Chapter 3.